Okay, good afternoon, everybody. Welcome to the Trading Setup channel. My name is Nico. Excuse me. And as always, we're going to be doing some trading today. Guys, remember, if you like the content, don't be afraid to hit the subscribe button and the notification so you guys can get notified whenever I am streaming videos or publishing new stuff. So yeah, today we're going to be talking about the CCI, which is a brilliant indicator. I've been using it for a couple of years. So let's get to it. Before we do though, as always, those of you trading with PO Broker, I've got a promo code for you guys for 80% deposit bonus on a deposit from as little as $10. And that promo code today is CCI80. So yeah, for an 80% deposit bonus. Then before we kick off with the actual CCI, let's go on over. I'd just like to remind all of you about this, the New Year pocket celebration for 2025. There's only 3 days left. So yeah, make sure you participate. They've got cash prizes up to $10,000. So yes, you're gonna get what you call it, unique numbers, entry numbers to participate for every $50 you deposit. And they've also got these and lots of other prizes they're giving away, promo codes. They're giving away risk-free vouchers where you can take a trade when you activate the voucher or the code. Whether you win, if you win, you get the money. If you lose, you don't lose any money. And they've got bonus to balance as well, where you can actually just credit that money to your account. So yes, this is a what you call it. Please remember to make use of it, and yeah. Okay, so before we get to the, as always, before we start trading, before we start looking at ways that we can use the CCI, we're gonna quickly discuss what it is, what it's showing us, because like I always say, we cannot use the data that an indicator is showing us. We cannot use that efficiently in making trading decisions if we do not understand what it is that it's actually showing us. Okay, so those of you that's those of you that's here while we're going, please feel free to ask any questions. I do have the chat open. I'm keeping an eye on that. So yeah, if there's anything that you guys don't understand, explain again or in more detail, please feel free ask that. Okay, so CCI. CCI is a momentum-based indicator. It was developed by a guy called Donald Lambert in 1980. For those of you that is really into math, that is the way that that's a formula for the CCI. That's how it's calculated. We have three, let me get out of the way there. We've got three or four components of the calculation. We've got typical price. Typical price is the average of the low, high, and close for the period that you set your CCI to. So if it's on a 14 period, that will be the average high, low, and close for the 14 periods. We've got the SMA, which is quite simple. It's a simple moving average for the same period that your CCI is set to. And then we have the mean deviation. The mean deviation is the absolute deviation between the typical value and the moving average value. Okay, and then that's 0.015. That constant, because of that constant, that value, this ensures that the CCI remains between positive 100 and negative 100 70 to 80% of the time in normal market conditions. So if that value has changed, that percentages will change, but because of that specific value, it means that the CCI will range between the 100 and the positive 100 and negative 100 throughout normal market movement. It will remain between within those parameters 70 to 80% of the time. So we can So that will cause us to pay attention when the CCI moves outside of those overbought and oversold levels. Okay, so let's have a look at the CCI, and then we're going to look at three different ways that we can use the CCI to find entries. It's one of the advantages of the CCI is that it shows us both continuation and reversal areas. Right, so I'm going to show you guys how we can use that. We're going to look for a few trades. Let's head on over to the charts and have a look and see what it's about. So this is the CCI here, the one in teal. And I've got my levels set to positive 100 and negative 100. This is the default value. Usually, if you load the CCI, this will be your default value. My CCI period is set to 14 because I use all my indicators are set to 14. That's just because most indicators defaults to 14. If something doesn't default, for example, if you load the CCI on here on PO Broker, the default value is 20. You can use it on 20. It doesn't matter. I just set everything, all my indicators, I set to 14, which is the default value for most indicators. Okay, so CCI. We can see, as I explained earlier, the CCI will always remain within these, within the 100 positive and negative 100 values most of the time. But there are areas where this will get outside of the of those levels. And these are the levels we want to pay attention to. While the CCI is moving within, what shall we call this? Let's say the 100 band. So while the CCI is moving within this 100 band area, or close around zero, it doesn't really tell us anything. So there's not much we can use it for when that happens, but we're gonna be paying specific attention to areas where it gets outside of the where it leaves gets outside the overbought and oversold levels. So how can we use this? There's three very effective ways to use the CCI. The first one will be with the moving average. Now, this is a moving average. I've set this to a 10 period. It's a simple moving average. Basically, what we do is I'm using this while the price is moving below the moving average or above. This will indicate price direction for us. So when we had a beautiful drop here earlier this couple of hours ago, beautiful drop on Euro USD, and for most of that time, price was price kept below the moving average here. So the way we do this is when we use moving averages. Remember, a moving average indicates trend for us. So whenever we use moving averages, that means we are doing something with it with the trend. Usually when we work with anything that's showing us trend, whether it's trend strength or trend direction or stuff like that, any indicators that works with trend, you will want to go in the direction of the trend. That's where they are most accurate. Any trend indicators will quite oftentimes you will struggle to find reversal entries or accurate reversal entries using anything that indicates trend. Okay, so when we use the moving averages, as I said, it's a trend indicator and we're going to go with the trend. So what we do is when price is moving below as it was here, we're going to look for areas where the CCI drops below the negative 100 mark. So technically it will be going into oversold status, I suppose is the correct word. And as soon as this does, we're going to take a sell because this is the direction of the current trend. So we're going to look for sells. So every time we had a sell there, where did it dip down? So that was the candle that dipped it down. So we could have taken a sell there, whether 1 minute or 5 minute. I prefer, when I'm using 1 minute charts, I prefer to trade on 5 minutes or to do 5 minute expiries. but we could have done a 1 minute here as well. And CCI came back up and it dipped again right there. And here's the reason I like to do 5-minute trades, because oftentimes, did it close through? Okay, no, it didn't dip through here. It did dip here though. Now that bounced off the 100, but we had an entry there. So again, if you take 1 minute or 5 minute, you would have been in the money. We were still running below the moving average. It dipped through there. 1 minute would have burned you here, but a 5-minute trade would have been good. And when it came through again on that candle, you could have again gone 1 minute, 5 minute. So we're just going in the direction of the trend. And whenever there's a strong trend, if it's a bullish trend, a bearish trend, we're going to take trades every time that the CCI dips below the minus 100. The opposite is true if we go and look for it's been a while since there's been a decent trend on a decent bullish trend. So if we look at this, this was a bullish trend. So every time that the CCI crosses over the 100, we could have taken buys there. It came back, it broke through again here. So 1 minute in this case would have been a bad trade for you, depending on where you got in, but a 5-minute trade would have been great, would have been in the money as well. Okay, and we had the same here. This one would have lost for us. Where did this one cross out over? That was the crossover candle. So again, 1 minute or 5-minute trade would have been good for you. And we had another crossover there. 5 minute in this case would have burned you, although 1 minute would have been good. Okay, so that's one way that we can use the CCI. We use it when price is moving in a trend. We can look for areas where the CCI gets out of the oversold and overbought levels and then actually go in the direction that it's moving. Another way to filter out trades when we are in a strong trend, if you are using the ADX for some kind of for a different strategy or whatever, we can use the ADX as well to determine whether a CCI entry in the trend is going to be viable or not. And the way we do this is we have to keep in mind that the ADX consists of 3 lines. We've got the positive DI, the negative DI, and then we've got the ADX line itself. Important to remember that the ADX line itself, this will be the yellow line that's indicated here. The ADX itself does not show direction, but instead it shows strength. Right, so the strength of the move is shown by the ADX. So while we're moving in a downwards direction, as we did here, we can see the ADX climbing and climbing and climbing this whole time. The higher the ADX is climbing, the more, the higher it goes. It's showing us that there's more and more, the move is getting stronger. So there's more strength behind this move. So what we can do is when we've got a very high ADX, we can then look for areas where price is moving in a trend like we had here, right? So the DI minus was dominant here. The DI minus indicates downward movement. If the DI plus is dominant like we had here, it shows us upward movement. But we can use the ADX as well to filter it out. When the ADX is climbing like this and we are in a downwards move, when while the ADX is very high, we can actually take trades when, in this case, it was a bearish move, so we would have taken sell trades when the CCI went outside the 100 parameters. Okay, so that's the way that's the first way that we can use the ADX. We use it with the CCI. We combine it with a moving average to get a trend, an idea of trend. And for this, we use a quick moving average, right? We're not going to be using a 200 moving average, for example. This is it. Sorry, let me just open this up. This is a 200 moving average. And it's not enough to filter out even the 50, I believe. Yeah, this is the 50. Even the 50 will be might be a bit slow. You want to use a quick moving average, 10 or 20 moving average max, I think, for this specific strategy, just so we've got an idea of where price is going. Okay, So that's the way number one. We briefly touched on using the ADX to confirm entries when we're moving in a direction. I'm going to take a sell here quick. Should have gone 5 minutes. I'm going to take a 5-minute sell as well. Okay, why am I doing this? As we just discussed, price is moving below the moving average and properly. So what we're going to do, CCI is getting out of the, going into the, well, just crossed over the negative 100 value. So this means it's going into oversold, what's the word? I think it's, let's say into oversold status. So it's showing oversold now. Market is oversold, but because we're moving in a strong direction, or in an already established trend moving well below the moving average, we're just going to go in the direction of the move, which is in this case we're going bearish. So we just took sells and we're going to ride this out. So I'm taking a 1 and a 5 minute. The 1 minute's going to win. There it goes. Boom. 1 minute's in the money, and we'll give this 5 minute trade a little bit of time, but I'm pretty sure that's going to run as well. Okay, so while that's happening, we use the CCI in this example that we did now. We use the CCI as a continuation indicator. Now I'm going to show you guys a way to use it as a reversal indicator. And for this, we're going to use the ADX exclusively. We're going to look for areas where the CCI gets out of. Let's just find some nice examples. Why is this flat like this? Oh, this is the 1 minute. I'm going to switch to 10 seconds quickly. It's just going to give me more examples. Okay, so let's look at this. We're going to look for the areas in the CCI. Those of you that watched my video on the ADX a while ago will know or will remember when we get DI spikes, while the ADX is low, at a relatively low value and flat, and we get big DI spikes, that usually tells us that this is an area where the market might, this is an empty move, and the market might just do an immediate pullback, and there might be an opportunity for us to find a trade. This trade's going to do well. We can use the apply the exact same principle with the CCI, especially if the market is ranging and not trending. Okay, so this area here, we can see that the on the 10 seconds, the market was pushing quite a bit, and then it basically flatlined. It was ups, we had the ups and downs, but there wasn't a real direction for a while. So while this is happening, we can look for areas where the CCI gets way out of way into oversold or overbought areas. But we're also going to look combine this with DI spikes. So what we need is we need the CCI to get outside of the 100, either the positive or negative 100. This needs to coincide with a DI spike. If it's a downwards move, it's going to be a DI minus spike, which is on my chart the red line here. If it's a upward spike, it will be a green DI spike. So what we're going to look is spikes like this, where the ADX gets, where the CCI gets outside of the oversold area. We can take that as a reversal. You can see my ADX has been basically flat, and it's a very low value. Let me move this quick. What's the value of this here? That's 17. Okay, so that's 17. This is no 17 area, 17, 18 area. But my ADX was, of my DI spike was almost 50. So that's way more than even double. At the same time, the CCI got into oversold area. So when it looks like this, I get a big DI spike with a low ADX, and my CCI gets into oversold or overbought. That usually tells me it's time for a reversal trade. Price is unlikely to continue, and that's where I do reversal trades. So but it needs to be, we do need to wait for the market to be ranging. So we're going to look for continuation trades when the market is trending. Let's see if that's this is doing well. We're going to look for continuation trades when the market is trending in a direction. Then we're going to use the CCI to go in the direction of the trend. When the market is ranging, we're going to use the CCI for reversals. Okay, so we've discussed two ways now that we can use the CCI. Like I said, first one is with the moving average. We combine it with the moving average and then use the direction of the trend to take continuation trades as soon as the CCI goes into oversold or overbought. Or when the market is ranging, we're going to use the CCI alongside the ADX to find reversal opportunities. So then we're going to be looking for DI spikes, and that happens at the same time when the CCI goes into oversold or overbought, and then we're going to be reversing those trades, because we know that when the market is ranging, it's more likely with the DI spike and the CCI oversold overbought, it's more likely to reverse immediately than it is to go into a run. All right. There's a third way that we can use the CCI, and most of you, anybody that's been following my videos, will be able to guess what's coming up next. So the third way we can use the CCI for both reversals and continuations is by using it to find divergence. Okay, so divergence is and always will be one of my favorite methods of trading. So yeah, we're going to look, we can use the CCI for divergence. Just a quick note, all the strategies I'm discussing, the stuff we discussed today and the stuff we discussed in previous videos, I sometimes forget to say that this works on any time frame. Okay, so when I'm trading options, I trade 10-second charts and one minute charts. For 10-second chart, I use 10-second charts for 1 minute expiries, and I use 1 minute charts for 5 minute expiries. Most of the time, by far most of the time. But you can also use this on a 1 hour chart or a 4 hour chart. Keep in mind that you always need a few candles for stuff to play out, but you can use this, you can use all these methods you can use on higher time frames as well, 5 minutes or 10 minutes, 1 hour charts, 4 hour charts. You can use it for options or forex, it doesn't matter. The principles remains the same. It doesn't matter what your time frame is. Okay, so let's look at divergence, see if we can find a few examples quick. This was not an example. There was a few nice examples earlier. There's a pretty nice example. I've got drawings on my line. It is an divergence example, although it's a bit tight. It's still a valid example of divergence because we did have a decent pullback. Okay, so price was moving down, made a new low, pushed back up, made a correction, got rejected by the moving average. Although the moving average doesn't play a big role in this specific move, but it pushed up, came down again, made a new low, but we can see that the CCI did not. So that's normal bullish divergence there. And that would have been a buy signal for us. We could have taken a buy here because I'm on a 10-second chart. This would have been a 1 minute trade, and that would have been absolutely fine. We can use the CCI to find all different kinds of divergence. Remember, there's 4 kinds of divergence as well. We've got the two normal ones, normal bullish, normal bearish, and we've got the 2 hidden ones, hidden bullish, hidden bearish. Your 2 normal divergences will signal reversals for you, whereas your 2 hidden divergences will signal continuations, trend continuations for you. Okay, so we can use the CCI for both of those. Let's see if we can find a couple of examples, at least one example of hidden divergence. This will be a decent example. Okay, so we had, where was it? There we go. Let's get you out of the way there. Okay, so price was moving up, and then it did a decent move. Came back down, made a new low, and we can see that this low that it formed was higher than this low here. So this is a higher low, but my indicator made a lower low. This is hidden divergence, and this would be a buy signal for us. You could have bought anywhere on that candle for 1 minute, would have been a good trade. Okay, As you can see, this is a 10-second chart. You're not going to get an entry a minute. Nothing, none of the strategies I discuss will give you an entry a minute or every 2 minutes or so. You're going to have to wait for them. You're going to have to be patient. I have to this day not seen a sustainable strategy that's going to give you even 2 or 3 entries every 10 minutes. It's, according to me, it doesn't exist. But trading requires us to be patient and wait for good setups. This is the reason why every time I do a stream or I talk about an indicator, we make sure that we understand what it's showing us, and then we can, from there, we can learn to identify areas or opportunities that that specific strategy is gives us, and then we can take the trades. This is also the reason why I trade with 6 or 7 strategies when I'm doing my normal trading during the day. I don't just use one specific strategy, because most strategies will give you, even if you're on a 10-second chart, most strategies, decent strategies anyway, will give you maybe 3 or 4 entries an hour. So that's on a 10-second chart. Usually, I will almost average, I will say about 3 entries per hour. But if I do 5 or 6 different strategies on the same chart, I get more entries per hour, so I don't have to wait that long. But any specific strategy that is decent will require you to wait for entries. So please remember that. It's one of the things people struggle with the most. I see this constantly. People think if they haven't taken, especially if people are trading options, it's quick. You do 1 minute or 5 minute expiries, and I see it so often that people will sit. They haven't done anything for 10 minutes, and they start to think, I'm doing something wrong. I'm not trading at the moment. And this is totally the opposite. You're doing it right. Sometimes I have to sit and wait if the market is. Sometimes the market's not good for my strategies, or it's a slow day and there's not a lot of volume, or not a lot of volatility. Sometimes I sit and wait for up to an hour before I get any entries. And that's how I gauge good days or bad days. Good days is giving me plenty of entries. Bad days is giving me no entries on my strategies. So that's something to keep in mind, right? The CCI is a very powerful indicator, in my opinion, if used correctly, but the market is going to force you to wait for those entries, right? So please keep that in mind. Okay, so we're going to look for a couple more trades quick for a bit, I think. In the meantime, remember, those of you trading with PO broker, you guys can use CCI 80 as a deposit code for an 80% deposit bonus from as little as $10. But if you want to enter into this New Year's prize pool, it's going to have to be a minimum of 50. Every $50 will get you an entry. But yeah, less than 3 days to go for that big draw, guys. So yeah, if you still need to make deposits, get that out of the way. Right, let's see if we can find a couple of trades. It is the 23rd. We've got Christmas in 2 days. So traditionally, this week is the market movement will be a bit odd this week. So those of you that are trading, just please exercise a little bit of extra caution. Make sure your strategy or your entries, make sure you only take entries that are within the parameters of whatever strategy you're using. But this is definitely not the time of the year to take risky trades. You do want to wait for good setups, high probability setups, especially. You want to get decent trades. Let's see if we can find something. Okay, it looks like we're going into a range here. We had to drop, did level out, we did drop. I've got a very low ADX at the moment. So what I would do now is see if we can maybe get, this is the 10 seconds. So I'm going to look for, not 5-minute trades. I'm going to look for 1-minute trades on the 10 seconds. So we're going to see if we can maybe hook, find a DI spike here, where the ADX is at the same time gets out of the 100 area. It's going to be either top or bottom, doesn't matter, because we are definitely not trending at the moment. We did miss a kind of a decent divergence buy here. I was just a few seconds too late to spot that trade, but there was a buy opportunity here as well. Let's throw it in while we are waiting for something else. There we go. Okay, so we can clearly see that the low that price made here after the pullback was much lower than this previous low, but my CCI made a higher low. So this is normal bullish divergence, and that would be a buy signal for us. We got, I was drawing, I think I missed this. This looks like, I'm going to take a sell here for a minute. We did get a semi-decent DI spike here. That's a DI plus, so the green one, although this is going to probably be the better one. But my ADX is relatively low still. We can see the ADX when I took the trade, the ADX had a value of like 15. And my DI plus value was 40.87. So DI spike more than double what the ADX value is. So it's a sharp move. But because the ADX is low, it's telling me that there's not a lot of strength in the move. The ADX isn't really moving at that point, and the fact that the CCI then got above the 100 value into overbought area, that tells me that this is likely to reverse instead of continue in the direction. Remember, when we started looking for trades just now, we did say that we are ranging here. That's one of the first things we identified right now. It's one of the first areas or things we identified when we started looking for trades. We had the drop, the pushback, and now we're just basically flat. So while this is happening, while it's moving like this, let's actually let's do this. Okay, so more or less, remember when we draw channels and trend lines like this, we're just looking at more or less, it's never a specific price. We're just looking at a specific, or just trying to gauge a range here. So while price is moving in this, I would say we're not going to look for any continuation trades. And when a price does break out, whether it's to the bottom or to the top, then I'm going to assume that we're going into a trend as well. But while it's inside here, I'm going to look for areas like this sell trade we took just now. I'm going to look for opportunities like that. So when I do get a decent DI spike, and at the same time CCI goes into oversold or overbought, and the DI spike confirms the direction or the strength, that's what I'm going to do. While we're in this channel here, I'm going to be doing reversal trades. Usually I don't draw this in, I just gauge it with my eye. But if you're new, especially if you're new to trading, I've been trading for like about 25 years now. If you're new to this, draw this in. If you find that, if you think that the market is ranging, draw a channel in like this or something, you know, until you get to the habit of it. After a while, you will start to see these things without having to draw them in. But yes, as I said, while we're moving in this now in the 10 seconds, I'm not going to be looking for any continuation trades. So meaning, this is also one of the things we're going to look at. One of the first ways we use the CCI, we said earlier, is if price is above the moving average and it goes into overbought, we're going to take a continuation trade. And we did a sell in using that earlier. But price isn't trending here. We only do this when price is trending. Okay, so keep that in mind. We are definitely not going to be taking, simply taking buys. It would have been foolish to take a buy in this area here, while Well, technically, price was above the moving average and it did go into overbought. Price isn't trending at the moment. So we're not going to take continuation trades. We're only going to take continuation trades when we are in an established trend. When we're ranging, we're going to do reversal trades, right? Which we did. We did a reversal trade here based off the ADX, and it was a successful trade. We don't take continuation trades while we are ranging. Similarly, or conversely, whatever. At the same time, when price is in a well-established trend, do not take reversal trades lightly. Okay, make sure it's a reversal trade before we do it. I'm going to take another sell here because we're still ranging. CCI is way out. And we had the same thing again here. We had a big DI spike, DI plus spike, but my ADX is low. Although the ADX is climbing a bit now, that's a bit worrisome. But let's see what happens. We might start to price might be starting to might be beginning a trend here now, or might break out. There we go. Okay, so this happens as well. This ADX started climbing quite sharply. Unfortunately, it only started climbing after I took the trade, but it happens. Okay, so they will always be losing trades. I haven't seen a 100% strategy up until now. It doesn't exist, so please don't let people tell you it does. So what we're going to do now is price is broken through this area. We're going to see now if it continues. Sometimes it'll just come back all the way down. If it does continue upwards, we can then assume that we are establishing a new trend. This could just be, remember, this is now, this top area of this channel here will be was a resistance area. We broke through, so this becomes support now. So this could be just the retest of the broken support area. So we could see it pushing upwards. If we do make a new high, I think it's safe to say that we are going into a new bullish trend. Looks like it is. And now we can start looking for, I moved this. Now we can start looking for continuation trades. Or not quite. Okay. So as I said earlier, this is a weird time, especially this specific week. We're going to see odd behavior from the market. So please exercise extra caution if you are trading. This week and next week is going to be more challenging than most the rest of the year. Let's put it that way. I was hoping we could get some more entries and stuff. We did 4 trades now. We lost one of those. We did 2 after 10 seconds and we did 2 after 1 minute chart. What's the time? It does look like we're getting divergence here. But what we're going to do, I'm just going to wait. I've got my ADX is climbing very sharply now. It's coming up strong. If this CCI gets out here, I'm going to take a 1 minute buy. If price pulls back now, it doesn't look like we're going to get an entry. Man, I would have liked to do one more. Okay, but that's the CCI. So there is a few people watching at the moment. Any questions? While I'm here, good time to ask. Anything that's been unclear? Anything you guys would like me to explain again? No? I'll give it a few minutes because there is a bit of a delay on the stream. Let's see. Boom, there it goes. That's a big red candle for the 10-second chart. Okay, so I think this is done for now. All right, so if there are no questions, wishing you all a very Merry Christmas in 2 days. Hope you take some time, spend it with your loved ones, get some rest in, and I'll see you all next week. Next week on Monday. I promise you, next week, Monday's video is one you don't want to miss. We're going to kick off. It's the 30th of December. We're going to kick off the new year with a video, and I'm going to be discussing the real secret of trading. Right, so you guys don't want to miss that. Try to join, get those questions in while we're busy with it, because this one, it's not going to be what people expect, but according to me, we're going to be discussing the real secret behind trading, according to me anyway. I've worked with quite a few people in the past, and this is what everybody struggles with. So we're going to be discussing that. Until then, guys, as always, trade safe, trade smart, and I'll see you guys on Monday. Have a great day, and cheers.